I'm here with Mr. Skinner. For all the viewers who don't know him, you're a major fintech guru, right? You're invited to all fintech conferences to speak.
Yeah.
And you also meet a lot of bankers, CEOs of banks. Are they in this fintech revolution? Are they doing a good job?
The banking leaders?
Yes. No, why not?
Mainly because the constituency of the demographics of bank boardrooms is skewed towards old men. And they understand banking, but they don't understand
really true
digital and technology in the way in which younger folks and more diversity of talent understands technology and how it can change finance. So if you, for example, talk to a bank leadership team and try to find someone who could talk to blockchain and the difference between blockchain, distributed ledger, Bitcoin, Ether, Zcash, then I'll be amazed and impressed. I'm not saying they have to be at that level of depth, but I think they do have to be at the level where they understand what blockchain technologies are and how they work and what it means for financial services, and not just say, oh yes, done that because we've assigned it to this chap down there. So it's really saying, there's a statistic I'm using in all my presentations that 94% of banks' leadership teams are bankers, and they have only 6% therefore that have any technology experience.
Wow.
And considering that banks are fintech companies, that's kind of a little bit of a wrong proportion.
Do you meet any bankers who are, reading or that they are former bankers, or they are bankers of course, but the old men you're talking about, they've read about it and then they're up to speed? Or do you really think these have to be IT guys basically?
I think not necessarily that they have to be IT guys, because by way of example, I would describe myself as a business person first, a person who understands financial services and technology second, and third, that I do have a good enough understanding of technology to be able to absorb the concepts, but I'm not good enough to understand the technical detail. And I don't think I need to understand the technical detail, but I do need to understand the concepts at a level where I can fundamentally see how that could change the business in the future.
Yeah.
And that's where I think banks' leadership teams are flawed, because there's a few who are better. They're not all the same, but the majority have people who just don't get the concepts at the level where they can see how it can change the business. Great example.
Yeah.
Gartner Group came out with a statistic in February that 76% of the banking executives that they surveyed thought that digital meant zero change to their business model.
Sorry, what?
The digital revolution we're going through means no change to their business model.
No, I understand, but I was just surprised.
I had this debate with some bankers just recently, and they said that's because the majority of the bank's leadership teams think that having a chief digital officer and a mobile app means that they've done digital.
Right.
Whereas digital is actually a revolution of the whole infrastructure and operations and culture, in fact, of banks, because it's open sourcing the bank into the next generation from what's currently a very much proprietary and controlled structure.
Can you give me an example of maybe a traditional bank who is doing a good job?
Well, there's four standouts that I use regularly, and there's a reason why I use them, which you'll see. So BBVA in Europe, DBS in Singapore, Asia, and Capital One and USAA in the States. And all of those four examples have either a CEO or a chairman who has a background in technology and has a balanced boardroom with diversity of technologists and financial people working together, and has recognized that the idea of staying in control of their business model and operations is actually disappearing because it's being open sourced. And in an open source marketplace like the Amazons of this world, or of the Badoos, Tencents and Alibabas of this world, you have to be collaborative and open for all players to be on your platform. You cannot close things down and lock people out.
But in the Netherlands we have a regulator who actually estimates if you will be a good member of the board. And I believe that experience in the financial sector, I think, is obligatory. Isn't that something?
It's obligatory with most regulators everywhere, but most regulators everywhere are also starting to adapt, because most regulators everywhere have only looked at regulating the financial markets and when they go wrong.
Yeah.
But now they're all saying, oh, technology is opening this to more competition, better customer service, reduced inefficiency and friction in the system. So let's create a sandbox and bring these guys in and work with them and see what they can do.
Yeah.
And then let's create some regulations that will force banks to open up their data through APIs. And then let's maybe actually say that you have to work collaboratively in an open structure with all the fintech companies out there that we approve of.
Yeah, but if you are board of a bank and you were first forced to just hire bankers, it's not just your fault, of course, that you just hire bankers. It's also the regulator's fault.
The regulator is changing on that front as well, I think. I mean, I'm meeting more and more guys who are coming in at leadership level in financial institutions that have telecommunications backgrounds, technology backgrounds. They've come from other industries. Sometimes, obviously, they've come as a technology guy from another bank. But regardless, the regulators are recognizing that the digital revolution means that in financial services you have to have digital people in the leadership team too. Okay,
so what if you were a CEO of a traditional bank for 1 year or so? How would you approach blockchain? What would you do?
It's probably not the answer that some people would expect to hear, but I would probably say I'll leave one guy to just watch it.
Really?
Yeah.
Just watch it?
Yeah.
And see what the successful products...
Yeah, because at the moment there's an awful lot of investment going into proofs of concept and pilots, and to be honest, most banks have more pilots than KLM. And that is a problem. You've got to take
That's really funny and so true.
Yeah, you've got to take it from an idea into an actual implementation.
Yeah.
And what I find is there's many banks doing lots of blockchain proofs of concept trials and experiments, but it is still very experimental. And knowing how banks think, I put all my money in doing work with machine learning and artificial intelligence right now to get better data analytics in my back office, to have leverage over my competition by knowing my customer more intimately and better than everyone else. That's where I think the low-hanging fruit is in the near term. In the long term, blockchain will transform the industry.
How?
But I think I'd have my guy watching it and knocking on my door when he starts to, or she starts to see that happening.
And how will it change the industry, do you think?
Well, we're building an internet of value. You cannot have an internet of things without an internet of value. And the reason being is that how will the internet know that I've got these devices on the internet and that I've approved for them to transact and trade on my behalf if I don't have some form of value scheme structure that underlies that? And that value scheme structure isn't going to be based on SWIFT and SEPA. SEPA will be playing a role in there because it's part of the regulatory requirements. But what really is going to be happening is you're going to have trillions of transactions from billions of devices non-stop all day long of very small amounts.
Yeah.
And right now, that might be given away to the Apple Pays or Android, Samsung Pays of this world, unless the financial system starts to adapt to be able to support trillions of transactions amongst billions of things with automatic authentication. And that's where the distributed ledger will play a very strong part, because it'll enable us to have fast and almost free transactions through real-time authentication.
Yeah, and you're talking about the longer term?
Long term.
Yeah, long term. But what is that, 5 years, 10 years, 15 years, 20 years time?
Well, a lot of people would like me to say it's next year. But I kind of see there's a drip-down effect. So the drip-down effect or waterfall effect is that the banks and financial institutions have to work out, first of all, how this new internet of value will work in a regulated environment, because it needs to have that regulatory structure to protect the consumer. And the regulator also needs then to approve this structure. Then that has to be rolled out to corporate clients, because it's often going to be the corporate client that will be transacting with the retail customer. And then finally the retail customer will be able to go into a shop and pay in Bitcoin or in whatever coin is being used by that stage. And that, to me, is going to take about 8 to 10 years.
Okay.
And right now, obviously, you could pay in Bitcoin. Because there are retailers who will take Bitcoin, but they're not mainstream. They tend to be a little bit eclectic and in Silicon Valley. So we need to have this in a mainstream digital currency format rolled out by the financial system as an internet of value.
And you actually think, but it won't replace the euro or the dollar, right? Or do you think it will?
You might have digital dollar and digital euro.
Ah.
But what I see happening, and in fact I'm just working on a new book called Digital Human that's going to articulate this.
Okay.
I've written several books. So The Internet of Value was my last book, ValueWeb. But Digital Human is that I had a realization that we're in what I call the fourth revolution of humanity. So 200,000 years ago we became the main dominant form of human on this planet, Homo sapiens.
Yes.
And we did that because we created shared belief structures. And there's a book about that called Sapiens.
Yeah, I actually now reading that.
It's a good book.
Funny, yeah. Okay, yeah.
Then 5,000 years ago, we invented money in ancient Mesopotamia, which is now Iraq. And then 300 years ago, we had the Industrial Revolution and we invented banks. So in each revolution, we've had a growth layer of our understanding of how we trade, transact, and store value. So initially, shared belief structures developing into money, developing into storing money in trusted value stores called banks, developing into the digital revolution, which is where we are now, which is going to be a distributed ledger, decentralized internet of value that allows us to trade, transact, and exchange value in very small amounts, non-stop in trillions of transactions all day long.
Yeah, last question, but how will this change my everyday life?
The main thing that will change is that money and financial services becomes completely invisible to you. You will stop thinking about money, you'll stop thinking about your balance, and basically you'll have parameters that you built into your Internet of Things and your devices that says, only tell me when I need to know something.
Ah, okay, cool. Thank you, Mr. Skinner.
Thank you, Freddie.
Thank you for your time.